I'm Malcolm Graham Wood, and welcome to my CEO interview today on Core London. My guest is Andrea Cattaneo, and he's still the CEO of Zenith Energy. And it's great to welcome you back, Andrea, and nice to see you looking so well. What have you been up to? If we could start with, if you could give me an overview of Zenith as it looks at the moment. It's obviously changed a lot. And then maybe I'll drill down in after that in questions about the individual areas in which you're operating.
We are now a multi-asset company, and we are able to deploy different results from different geological panorama. So we are in North Africa with Tunisia, and we are in Sub-Saharan Africa with Congo Brazzaville, which is more clear than saying simply the Republic of Congo, as everybody gets confused with the Democratic Republic of Congo, and then Nigeria. So we think that this mix is extremely effective because there is a mix of Francophone and Anglophone Africa, which are, as a consequence of their language and background, very different in terms of business, as we will see in the presentation we will give answering your question. And then we have as well different type of oil systems, and more modest but very linked to Europe, the Tunisian one, and then very grand, the Nigerian one, with the international presence, but a lot of sometimes questions made by the international community. So we think that this split, which we have achieved by design, not by chance, is extremely appealing and gives a mix of comfort and frontier. So that is the reason for which we have made these choices. Excellent.
So let's start with Nigeria. You've recently announced a move into Nigeria. What made you do that? What does that mean for the business as it stands at the moment, Andrea?
I started to look at Nigeria in 2012, and at the time we were a Calgary listed company, a Canadian listed company. And then we had an interest in the second round that was supposed to take place in 2013, and then 14, and then 15, and then was canceled. And then this second round was after the first round that was extremely favorable to investors, but indeed never fully exploited because of the confusion between operators and political owners of the fields, the marginal fields. Then the second round has come finally around in 2020. After so much waiting, we participated, but we were not impressed with the methods and the result. But staying in Nigeria during 2020, despite COVID, we acquainted with various people, and we remain very impressed by the fact that the Nigerians are very extremely large potential, geological and production potential, has less impact by bureaucratic organization, governmental and permitting authorities, and so has the possibility to transform a company activity in a short frame of time. So we remain very impressed, but we are looking for the right opportunity to come, which is still to be chosen, as we have at the moment only an option. In the meantime, we have had the opportunity to buy 2 properties in Tunisia, which is a very steady and Mediterranean oil-producing country with a very well-organized system to trade oil directly into refinery in the Mediterranean. And then since December 2019, we are chasing tilapia, which is a very important structure. And then this structure has been the core of another company before us, which raised 25 million pounds for it. And we are taking the heritage of this great opportunity, and we can transform it in a 5,000 barrels producing field.
Okay, well, let's do a bit more detail. I'll leave Nigeria because it's an option and move on to onto Tunisia. You've got a 22.5% stake interest. Indications looking through what you've been saying in the last few months is you're looking to buy more of that, and that it's production. Is that about right?
Partially is right, but it's a partial view. We have started in Tunisia with this property in 2020, in April. This property is called Sidi El Kilani. And then we have purchased the portion indicatively as first contract with KUFPEC, the Kuwaiti national service company and production company. And then the second owner of the 22.5 that doesn't belong to the government came along, and then the Chinese sold us their portion in September. And then the deal have been going through the classic bureaucratic process. Finally, we found a way to sort of arrange and go through this bureaucratic process, buying the first property, the Chinese stake, in the 18 or the weekend of the 2021 of November, and then the press release on the 22nd. So we are now official owner of a company called Chinese National Petroleum Company Tunisia, which has been renamed Canadian North Africa Oil and Gas. This company is 22.5 of Sidi El Kilani and produce net 150 barrels per day.
So the scope for that, for the time being, you're moving that. You'll move that quite swiftly, I would imagine, would you not? You're increasing the size of it and the production. Certainly,
there is a lot of potential. Sidi El Kilani was a field that was 10,000 barrels in the old days. Elf Aquitaine was one of the partners. They sold to the Chinese. Obviously, everybody expected the Chinese to have a great interest in this. But unfortunately, the CNPC had such a large portfolio, it's a company with 1 million barrel per day production, that this property came to oblivion. And so it has been ignored or sort of forgotten in the very huge worldwide portfolio of 50 plus countries. And then the opportunity came for us to buy it, because with our tender care, we believe that we can do much more in this field, which is still producing by fountain method and not by artificial lifting.
Excellent. Now, if I can concentrate a bit on Congo Brazzaville and your position there, which is, I understand, the tilapia well, which you correctly said had been drilled by, I think, at least one company beforehand. Where are you on that well? And I wonder if you can give me some history on that well.
Malcolm, I have to correct you. It's not at least, it's only one.
And who is that?
It was Anglo-African Oil and Gas.
And they started from scratch with that company, yeah?
Not on scratch on the field, but on scratch of the most important structure, which is the Geno. And so they raised 25 million pounds, which was a very large amount for this activity. And so we have the great advantage of them scouting the structure and making investment in the structure, making a well which has integrity in this horizon, which is the Geno, and unfortunately making, as often is the case when somebody is first, making a lot of mistakes. And so these mistakes cost the result that the well has not been completed and has not achieved target depth. And so, you know, I have very great sympathy and even thanking for them, because they spend so much energies for something for which we will get ripe the fruits. And so we have learned by the the wrong aspect of the drilling. And we have now 80% of the well already there with integrity. We know that we have made a deepening of a few hundred meters and then completion by way of sidetrack. And I think that everybody more understand who should be employed for this game, and not certainly the drilling company used before that we are chasing in tribunal. And so we are having the advantages of the second run instead of the first run.
So my memory serves me correctly, when they drilled that well, they said that the shallowest level would produce, 500 barrels a day or something like that. And, then you would see the second level of formation, which would be, very substantial. But the real holy grail was at the very deepest level, where they thought that it would be a massive discovery.
Yes.
Again, my memory is a little bit hazy, but I seem to remember they wrote off $15 million by making mistakes at the bottom end of the well, and you've just sort of confirmed that. But so you are at the moment, you've drilled all the way down and preparing to sidetrack. You're going to go right to the bottom, is that right?
Yes, I should say that we confirmed their analysis. The cost of drilling for the first level, which is producing at the moment 35 barrels, is not really worth any additional cost. The second level is prospectively 500 barrels and is not really worth, especially knowing what is the third level. The third level, which is the Geno, has a reputation nearby to produce between 15 and 25,000 barrels in the nearing concessions. So there is no reason, except an extreme thinning of the structure, which is unlikely, that we have anything much different. So this has been the marketing tool of our predecessor. We are always, as you know, very cautious. And so we think that we can aim for 5,000 barrels. And the well is already arrived to the last, missing the last 200 meters. So we have to make a sidetrack and then to make the completion. So there are a variety of situations that are very favorable, for which indeed there has been intense competition while we renew the concession, which is what we are completing at the moment. So I think that that is a very interesting opportunity, thanks to our predecessors, and it's sad, but it's life. And so we are very keen in completing this journey and to bring to our shareholder a lot of satisfactions. Before you go into your third question, I would like to add a little bit about the first question, because it seems that we have in Tunisia only Sidi El Kilani, which is not the case. We have other 3 properties acquired in the last 6 months, exactly in March and in May, which are first, Essaouia, a quite sizable producing field that gives the name to our oil that is sold in the international market as Essaouia blend. This oil is a mix of all our properties nearby, because all our properties that I am telling you now are all contingent. Then we have El Biban, which is another property, which is owned by us 100%. So we have a very interesting legal situation, which is producing condensate and gas. The gas is reinjected to enhance the maximum of condensate production. And then we have Robana, which is a crude oil field in the highland of Jerba, which is just across a very little strait of water between land of Zarzis and the island, which is producing crude oil. This property has produced for 10 years 25 barrels of oil, but has been assessed by us to be much more, having a much bigger potential. And indeed, we made workover in the last 30 days. And we just made, after workover, 124 barrels per day of oil. So altogether, this property already produced 600 barrels of oil per day. And with the enhancement that we are making as development plan, we are planning to reach in 2022 the famous 1,000 barrels, which I claim for a long time. And finally, we are there. In addition to that, there is the Congo potential. And then, although it's an option, I'd like to speak a little bit more about Nigeria. Nigeria is a very interesting situation where we have agreed, in case we exercise an option, so due diligence by us is still ongoing, to make 4,000 barrels out of a new well that will be produced, will be drilled in the middle of two producing historical wells. So just being sure that the area is very producing. And then this will be prudently making 4,000 barrels in a swarm situation, so with certain additional cost, but still 4,000 barrels.
Excellent. Sounds very promising indeed. I'd just like to ask, can I ask one more question about the Congo well? Because if I remember correctly, when it was drilled before, the state participated in the well and didn't pay the bills. Is that right?
Well, absolutely. The SNPC, which is the owner of every license, had 44% stake. And then at the last moment, they asked kindly our predecessors to pay the bills for them for $10 million. And the well costed 20, not 15. And then our predecessor gently paid that. They have been reimbursed by $3.6 million, but still 5.4, which are now with interest 5.7, are still missing. So we are very much believing that the $5.7 million will come home.
Understood. Thank you for clearing that up for me. Before we finish, I wanted to ask one or two other questions. You've just raised £3 million in London, and I noticed from the last RNS that I read that you said that you're fully funded now for the work that you've got going forward. Just give me a quick rundown of the balance sheet and the nature of the funds in the company, if you would, Andrea.
Of course. To clarify the balance sheet and hence the lending position, I have to go back to our philosophy of purchase. We have purchased considerable reserves around, at the moment, without Nigeria, 18 million of 2P reserves, and considerable infrastructure and fixed asset, by way of making transactions that have been very economical. So to list them, we have bought the remnants of AEOG for £200,000, including the credit of $5.7 million to the government and the receivable from the government, and then including equipment, machines, and the ongoing goodwill for the license. Then we have bought the 3 properties in Tunisia in February, March, and May 2021 for a compound of $150,000. And so that creates us a balance sheet in which we have altogether with assets and receivable and things, as you can see from our interim account published 2 days ago, circa $100 million of net equity. This permits us to borrow. And so our philosophy, although we have made, luckily, a small raise, so not making much dilution, to raise money in the international Pan-African lending market, which are sovereign national institutions, local commercial banks, local bonds, including them or adding to the international bonds that we issued in Vienna and Frankfurt in the last 3 years. So this makes us tending more and more not to raise money with equities, which is the easiest way. When we are in trouble, every one of us make a placing and raise the money. This is the most easy of the things, believe me. Issuing bond is much more complicated. Making a loan with a supranational institution is 6-8 months work. When instead making a placing can be 1 week or 1 day. So that is, of course, to our shareholders, I say, our interest to diversify away from making equity raising. And we have the ability to pay for the development of Tunisia and moreover for the development in Nigeria. The Congo development is a modest budget and is shared, as you know, as you said, between us 56% and CNPC 44%. We should simply guarantee the next time they will not borrow money from us.
Thank you for that. Thank you for settling that. And before we finish, I'm always interested in what stakes the management have got in the business, the shareholders, and importantly nowadays, the ESG process that all companies have to go through. So I noticed, I think you have just over 10% of the business yourself. And what about other shareholders?
And the board, you know, the board and the family fan club are very close. Then there is Maiton Premier Maiton, which has very much enjoyed following us from previous investment on us and in other companies connected to us. So we are very proud of their continuing interest and trust. Then we have as well some Nordic institutional investors, because you know that we have listed since 2018 in November in the Oslo bourse, which luckily became a much more grand pan-European Euronext with 7 stock exchange, which are Lisbon, Paris, Dublin, Brussels, Amsterdam, and Norway, and Milan. And so 7. And so this very interesting network is further development when we will have all the shares in one stock exchange trading in the other 6 stock exchanges. So I think that we are very happy of our choices, London and this global Euronext. And myself, I am keen to buy more and more shares. I don't say that because if I buy shares, people stop to buy because they think that there are no news, as they know that we are very compliant legally and in the stock exchange regulation not to buy when we know that there is something going on. And but I will find the time to buy something between one acquisition and another to keep my percentage and to put my money where my tongue is.
Excellent. Well, we've got to the end of the time allocated. Thank you very much indeed for talking to us. The last question is always, I always ask the same question is, you know, given that what you've said to me today, you've explained in a lot of detail what the company is, where would you expect Zenith to be in, say, 18 months' time, a year to 18 months' time, Andrea?
Well, you know, in 6 to 9 months, we believe to reach the 1,000 barrels. In 18 months, we may have completed one of the large acquisition we plan to do, including most important, the Nigerian one for 4,000 barrels. So to make already a quantum leap transformation exceeding the 1 million barrel per year and production, and so going into another league. As you know, 3,000 barrels make 1 million barrels per annum. And so that will make us going into another league. So this is what we are really aiming for. The company has as well is green aspect. We produce, which will help certainly in this transition period, which is the fact that we produce electricity from substandard gas, or in Africa, flare gas. So we have a plant in Masseria Vincelli, which is making a lot of profits at the moment with the electricity prices in Europe, making power from a substandard gas with too much nitrogen, which could not be admitted in the national grid, which is NAMRETE. So we found this way, and this model, this small producing energy, electricity entity, is a model that we are selling it in Africa. So we plan to be growing into some sort of green aspect to become a 4,000 plus barrels producer, and then to qualify to be more and more the purchaser of marginal field that are not sold by drop or sort of get rid of by the majors in Africa. Every week there is a news that some major want to leave a country in Africa, if you follow, as you do, these sort of informations. And so it's clearly visible, the movement out of Africa of majors. And so then to buy small fields, which for them means a small 10,000 barrels, for us is super, will be the task of the next 24 months.
Well, you've been fantastic, Andrea, as usual, giving me a full grasp of what's going on at Zenith. It's really lovely to see you again. I'm hoping that before long we'll be able to catch up in public, but for today, it's been Malcolm Graham-Wood doing my CEO interview on Core London. My guest has been Andrea Cattaneo of Zenith Energy. Thank you very much, and look forward to seeing you again, Andrea.
Thanks, Malcolm. See you soon.
Bye now.
Bye-bye.